In high-stakes environments, human judgment is no longer the initial filter. Your first challenge is surviving a cold, automated testing evaluation. Modern enterprises deploy automated screening tools to process dark pools efficiently, changing the rules of recruitment entirely.
Assessment testing. Many candidates feel that they're unfair.
Automated filters provide operational scale but introduce a thick layer of systemic anxiety for candidates. Passing these advanced assessments demands more than just memorizing standard technical configurations or textbook facts.
नहीं होता है what really
मैंने
happens
देखा कि वो लोग टिक करते रहते हैं कुछ पेपर में. I think they're constantly judging you. I remember when I was answering, so the chair was sitting across me and ma'am was looking at me like this, constantly looking into my eyes. So basically she was actually trying to evaluate whether or not I have integrity or not, whether I have that empathy, whether I have that leadership skills or not. Even if when I was saying sorry sir, sorry sir, sorry sir.
Validation structures now look deeper, probing your core behavioral patterns and real-time decisions under pressure. When candidates approach these algorithmic screens without proper preparation, the resulting failure is swift and absolute.
Of preparation.
Okay,
So remember we had the three main reasons: English, lack of preparation, lack of understanding of the recruiter. But now there's 5 more contributors, I would say. So they're not main reasons; they are contributors. So the first one is the lack of understanding of the challenges of what this job as a pilot is going to entail. And it's very difficult to measure this when you're a candidate and you've never been an airline.
Most failures stem from a fundamental mismatch between candidate assumptions and the actual difficulty of the test. Survival requires a dynamic mindset, continuously tweaking analytical models to counter highly volatile external conditions.
Pricing analysts focus a lot more on the actual price part of it. So they could be also looking at user retention, let's say, or customer retention on their products, but looking at it at different price points or looking at for different size of companies that are also buying their products, right? And so we'd have a pricing analyst that might notice that, customers churn more based on this specific price than another price, while a data analyst would be looking at customer churn.
Constant calibration is non-negotiable when operational margins are razor-thin and failure isn't an option. Without precision predictive systems, an enterprise can suffer severe logistical fractures that become incredibly expensive to reverse.
Not selling enough. I think that the biggest solution there would be some sort of analytics, just making sure we can predict more accurately how many units we're forecasted to sell, and then we just make a little bit more obviously than that, and make sure that we're not making way too many when maybe during a recession or during changing times, people aren't buying as many cookies. Again, I don't think that's the issue. It's probably one of the first ones.
Accurate early forecasting is the only line of defense against compounding operational disruptions. System integration requires perfectly isolated database structures to prevent critical data overlaps and evaluation errors.
Though it's an easy question is being asked is that the hiring manager is assessing whether you worked in an actual real accounting operation, because if you did, you'll know that if you combine 3 bank accounts into one ledger, you'll have tons of reconciliation issues. You will never be able to reconcile the books. So you need to separate 3 bank accounts into 3 separate ledgers so that you're able to do a bank reconciliation properly.
When separate entry points are messy, localized errors quickly multiply into a massive systemic collapse. When system performance begins to decay, engineers must immediately run a deep diagnostic scan to locate the break.
In today's discussion, I would love to categorize my thoughts under 4 buckets. First of all, I would love to understand the context surrounding our client and the market, which will then help me in my second analysis, which is the root cause diagnosis section. This is the part where I would like to dig deeper into the numbers and really understand where the problems are coming from. Third, based on those issues that we figure out, I would love to discuss some recovery strategies.
Breaking down chaotic data into distinct, manageable segments is the secret to engineering a recovery. Key structural indicators serve as early warning signs, highlighting whether an organization can withstand sudden economic stress.
This condition indicates 5 important things. The first one is probably there are high interest expenses on loans or bonds. Then there might be high taxes that they are paying. Significantly high non-cash expenses that they are making. Probably there is a loss in investments and other non-core activities. And finally, probably there are some unusual.
These metrics reveal whether an entity possesses the actual liquidity needed to fulfill its long-term obligations. Falling back on instinct or gut feeling is a liability when navigating high-stakes validation. You need undeniable proof.
If you cannot solve case interview math problems quickly, efficiently, and correctly, you will not be able to pass your consulting interviews and land a consulting job offer. Case interview math may seem difficult and intimidating, especially for candidates without strong quantitative backgrounds, but the math itself is very basic and simple. Let's get started right away. The 6 fundamental case interview math concepts.
Hard quantitative formulas slice cleanly through subjective bias, exposing what is truly happening under the hood. Adopting a strictly data-driven posture ensures that strategic choices are anchored in verified metrics rather than emotional consensus.
Accounting software as well, so you need to be somebody who's detail-oriented in order to be a good accountant. The second thing you should be mentioning is being objective. So objective is a great thing to have as an accountant, because objectivity means that you're basing your opinion on facts or data and not just on your personal opinion. So basically you need to be mentioning objectivity or being objective as a quality.
Radical objectivity remains the cornerstone of risk management when auditing highly complex corporate structures. Maintaining transparent, active communication during final review loops is vital, as silence is often interpreted as a lack of readiness.
Every interview, here's one thing not to do. When the interviewers are done with all of their questions, they will likely ask you if you have any. Do not say, "No, I don't have any questions at this time," or "No, I think you answered all of my questions." When you don't have any questions that are prepared for the end of your interview, this not only makes it seem like you didn't prepare for your interview, but it also seems like you might not.
Failing to assertively manage the interactive portion of an evaluation can tank an otherwise brilliant technical score. Every successful project evaluation begins with deep clarity regarding the underlying purpose in the specific problem set.
The possible answer for this question can be: you should talk about the motivations for the study, talk about the research problem you wanted to address which made you embark on the study. So the simple answer can be the motivation, or you should discuss about the problem that you are going to address in this particular study.
Locking down clear research parameters upfront protects the entire system from scope creep down the line. Accumulating massive oceans of information provides no value if your team lacks the core capability to interpret it correctly.
AI, and arguably will accentuate it. Those who have experience can massively take off with AI, but if you don't know anything, you're very likely to shoot both your feet off with a bazooka. So data is no longer a constraint. As everyone says, we're drowning in data. That's not a ChatGPT generation. I stole that one off Google Images. But data has not been walked together. So I think Anne made the point, we've got data, lots and lots of data, but we're not turning into information. If you don't have information, you're not making.
Raw data is just noise without human expertise without it. Sophisticated algorithms only accelerate bad choices. Many modern platforms project a flawless initial impression, carefully designed to impress evaluators during preliminary rounds.
Found as a challenge when I go to hire salespeople. Is they're really good at selling themselves. And that is a
sleek presentation can mask deep flaws, making historical data audits far more reliable than a polished pitch. The most agonizing part of getting rejected by an automated filter is the complete lack of actionable feedback provided.
The scariest part of the whole thing is you'll never know how you did on an assessment. The only indication you'll ever get that you passed is an invitation for an interview. If you failed, the only thing you're going to get is a thanks but no thanks email. You'll never.
Algorithmic systems provide harsh binary verdicts, leaving candidates completely blind to their specific tactical mistakes. Attempting to manipulate an advanced interview by projecting absolute certainty across all domains is a recipe for disaster.
When it doesn't exist in the field, तो ये है, मतलब जो reality है ना, उसको आप अच्छे से बोलिए, मतलब लेकिन ऐसा भी नहीं होना चाहिए. It should not sound very layman type of a language. उसको
अब अगर आप इसके लेयर को पील ऑफ करोगे ना, अच्छे से बोलने का क्या मतलब है? अच्छे से बोलने की डेफिनेशन जैसे
Openly declaring what you do not know reveals intellectual honesty, a critical trait that human panels respect. Succeeding inside a specialized corporate environment requires understanding exactly how your department fits into the enterprise landscape.
The second contributor to failure is a lack of understanding of your target airline.
Understood. Okay.
And so, of course, you need to know facts. How many employees?
Yeah.
How many pilots? How many cabin crew? How many planes? The types of planes? You need to know about the history. They're probably not going to ask you about the history, but you want to get into their know.
Zooming out to understand the macro ecosystem is the only way to prevent blind spots and operational friction. Wrangling vast data fields containing millions of individual transactions is standard work for elite risk analysts.
For pricing analysts, because you have to understand that pricing analysts dig through a lot of data. We're talking about thousands, millions, or even billions of rows of different kinds of pricing data points that they need to use for their models. Other more intangible skills are things kind of like analytical thinking and critical thinking. So this would be effectively what's used for almost any kind of analytical.
The true skill lies in structural isolation, extracting a clean, actionable signal out of absolute chaos. When a manufacturing ecosystem loses track of true market velocity, overhead and rust storage costs can spiral out of control.
That's actually increased the most. It looks like in 2020 it was around maybe 12%, and in 2022 we're looking at closer to 22%. There's quite a large increase there over 2 years, and so that would be really interesting if we had a further breakdown of that. But we'll dive into that a little bit later. But I would imagine just from looking at this, that's probably now the biggest concern for me, and I'm shifting a little bit more.
Bloated inventory levels are never just a storage issue. They signal a deep failure in demand forecasting models. Accurately weighing systemic risk requires auditing outstanding debt instruments and modeling real-time default probability.
Remember from school, from studying accounting, that there are two ways for estimating bad debt. It's either a percentage of accounts receivable or a percentage of sales. And the most common method is going to be a percentage of accounts receivable, because usually then what you do is you look at the aging of receivable, and for each bucket you assign a percentage of that bucket as an allowance for doubtful accounts. So basically,
counting on unhedged, questionable assets sets up a severe liquidity crisis when market volatility inevitably spikes. A sudden, sharp divergence in fundamental margin metrics indicates that an organization's core system is breaking down.
It's 80%. Interesting. It seems like there's an increase in the ratio of variable cost to revenues from 75% to 80%.
Okay.
What this tells us is the following. In a normal business, in a normal business cycle, you would expect variable cost to revenues ratio to remain the same. But in this case, there is an increase. So I would love to understand what might be some causes to that. Do we have any data?
Yeah, what might be the main reasons for that?
When running costs structurally outgrow operational intake, the underlying corporate model requires immediate triage. Isolate individual performance variables systematically to pinpoint the precise catalysts driving system degradation.
Profitability, efficiency, and financial leverage. Let's see them one by one. Okay, let's see profitability first. It is also called as net profit margin and is denoted by net income divided by the total revenue. It indicates how much profit a company makes for each unit of revenue. A higher profitability indicates better cost management and efficient operations management, which pushes its profitability higher.
Stripping away secondary data layers lets engineers isolate and fix the root causes of performance decay. Utilizing clear heuristics and streamlined mathematical models keeps your analytical workflow manageable during high-pressure incidents.
This tip is our top case interview math tip. Implementing this tip can instantly reduce your math mistakes by 50% or more. If you're working with numbers in the thousands, millions, billions, or trillions, use abbreviations rather than writing out all of the zeros. For example, 10,000 can be expressed as 10K. 200 million can be expressed as 200M, 30 billion can be expressed as 30B, and 4 trillion can be expressed as 4T. This makes multiplying and dividing large
Maintaining a clean, transparent framework is the best way to prevent simple mistakes from blowing up your model. To secure your trajectory in an automated, algorithmic career ecosystem, you must commit to ruthless preparation in verified skill loops.